Hello, this is Accounting 1. This is for Chapter 2. We're going to be discussing Lesson 2 today. Lesson 2 is about analyzing how transactions affect accounts. So we've already discussed this in Chapter 1 some, but I told you in Chapter 1 we would be adding to that. So some things you need to know before we get started. Definition word, chart of accounts. So you may be wondering, how do I know which accounts our company is using? Well, they have what's called a chart of accounts. And a chart of accounts is basically a list of all the accounts used by that business. So whenever I say we're going to be using supplies or prepaid insurance, or this is an expense or that's an expense, the way I know that is because Techno, which is the company we work with in our book, has a chart of accounts. And in your textbook, if you go to page 3, right here is Techno's chart of accounts on page 3. So I know that their assets, there's some others we're going to add to this because they've got cash, petty cash, accounts receivable for Oakdale School, accounts receivable campus internet cafe, our supplies and prepaid insurance. So there's some new ones we're going to be adding. And you can tell by looking at this which accounts they have. Here's the owner's equity. Now they've already broken this out, which I keep mentioning that we're going to be doing later. Owner's equity, they've got capital and drawing. Then they have their revenue accounts for their sales and all their expenses. So here's how we know what it goes into. So it's important to know where to find the chart of accounts. Some things that you must remember. Debits, which are on the left, must equal the credits, which are on the right. So every transaction is going to have at least two parts. There's always two accounts affected. And in the transaction, the debits must equal the credits. Just like we did before, after recording the transactions, the total debits must equal the total credits. So we're going to be finding the balances again and making sure that those numbers are still matching. This time we're just calling them debits and credits instead of necessarily increases or decreases. Okay. So whenever we see a transaction, there are 4 questions we're always going to ask with every transaction that we see. Question number 1, which accounts are going to be affected? We must have at least 2 accounts affected. For right now, that's all we're going to have. In some of the more advanced chapters, we will be adding additional accounts. But for right now, you're always going to have 2 different accounts affected. That's where we went through last week in Chapter 1, and we circled them whenever we dissected the problem. Question number 2, how is each account classified? Is it an asset, a liability, or owner's equity? You're going to have to know how to classify it. So if you look back to what we did for Lesson 1, I listed them here. You can also look on your chart of accounts, which was on page 3, to see if they are classified as an asset, a liability, or an owner's equity. Question number 3. How is the classification changed? Will it be increased or decreased? So if it's an asset, is the asset going to increase or is it going to decrease? And then finally, number 4, how is each amount entered into the account? Is it a debit or credit? So if it's an asset and it's increased, it's going to be increased as a debit. If it was an asset and it was decreased, it would be decreased as a credit. So we have to know, just like in Lesson 1 I told you, you have to know everything that's on this page. Sorry about that. Okay, so for every transaction we do, we're going to be asking these 4 questions. So I'm going to go back to my notes from Chapter 1, and I hope you left enough room in your notebook back on Chapter 1. If not, you can rewrite these into Chapter 2. It doesn't matter. Just so long as we have everything together. So, transaction number 1 said that on August the 1st, we received cash from the owner as an investment. We already broke this down. We saw that cash was going to increase by $5,000 and I did not put plus signs there, and that the owner's equity was also going to increase by $5,000. Okay? So what we need to know now, we know they're both increasing, but how are they going to increase? So, back to the accounting equation. Number one, what two accounts are affected? It's cash and owner's equity or capital, because this was an investment. Question number two, how are they each classified? Cash is an asset. Capital is going to be under owner's equity. And how is each classification going to be changed? Our asset is going to be increased, and our owner's equity is going to be increased. And then how will this be entered into the equation? So for this one, we had a plus, so it's going to be, if I just draw a little mini T account down here, I'm going to call it cash. It's going to increase. This is our right side. This is also our normal side. It's our debit side. Here we have left, and we have credit. Okay, we are increasing, so we increase on the debit side, so we're going to just put $5,000 here. Okay, nothing's going to go over here. So we've got part of it done. The other one was capital. And for our capital, if I just draw out our little account here, we know that this is the right side, and it's also the debit side. This is the left side, it's the credit side, and it's the normal side. Okay, so which one's going to increase? It is the credit. The credit's the normal. So if I just go ahead and put pluses and minuses here, minus and plus, I know that all I have to do is put the $5,000 on this side of the equation. Okay, I said number four, we always have to make sure that our debits equal our credits. So if we get done with this, we know that we now have $5,000 on the debit side and $5,000 on the credit side. You can see all that. Okay, that account is done. Transaction number two. On this one, we paid cash for supplies. How are each of these classified? They are both going to be an asset for this one, because cash is an asset, it's something we own, and supplies is an asset, something we own. So if I draw out a T account for cash, and I draw one out for supplies, I know this is our debit, credit, debit, credit. And I can go ahead if I want to and put, because this is an asset that we're going to increase over here, decrease here. Supplies is also an asset, so we're increasing on this side and decreasing over here. So on this one, we paid $275. So we know that we paid it. We are decreasing by $275. So I'm going to decrease on my credit side for cash. So I don't put the minus sign. I only write it on the credit side, $275. Supplies are increasing because we now have more supplies in our closet. So it's an asset. It's going to increase on the left side, which is the debit side. So I'm going to put it $275. We have a credit and a debit, and they equal, so we know that we did that one correctly. Transaction number three. This time we paid cash for insurance. So insurance goes into the prepaid insurance account. So I'm just going to put prepaid insurance. Draw my T. I've got my debit. Got my credit. I know this is a plus and a minus because prepaid insurance is also an asset. And we paid cash, so I'm going to come over here to my cash. My cash is going to go down again. So this time my cash is going down by $1,200. I'm going to put it on the credit side. Okay, I don't put a minus sign. I only have to put it on the credit side because it's an asset, so I know if it's over here that it's a minus or a decrease. Prepaid insurance is going to increase, so I'm going to put it on the debit side. So I'm just going to put $1,200 here, and I don't have to put any pluses. Okay, my credit equaled my debit. So I know that I am good to go with that problem. Okay, moving on. This is transaction number 4. If you're following along in your book, it looks like we are on page 35. Okay. This one says we bought supplies on account from Supply Depot. Is the first one. So we are not paying them cash because we're going to pay them later. So somewhere on here, I'm going to make a T account for supplies. Supplies is an asset. So I'm going to put it over here. I'm running out of room. Supplies. And my other account is going to be my accounts payable, which is a liability. So I'm going to grab a red marker. And this is going to be my accounts payable. I'm going to abbreviate AP, Supply Depot. Okay, a little bit long there. All right, we know debit, credit, debit, credit. We bought supplies. Is supplies going to increase or decrease? In chapter 1, we learned that our supplies was going to increase. So I'm going to increase it on which side? It's an asset, so I'm going to increase it as a debit. So I'm going to put $500 on the debit side of the T account. The other one was on account from Supply Depot. Supply Depot is a liability. Liabilities are on the right side of the equal sign. So they're going to increase with a credit and decrease with a debit. Am I increasing or decreasing? We learned that because we bought it on account, that we now owe them more money. So we need to increase the amount we owe Supply Depot, just like we did down here with a plus sign. So we're going to put that on the credit side because it's a liability. Oops. We are going to increase with a credit. Debit equals credit. We're good to go. Transaction number 11. We paid cash on account to Supply Depot. Cash, debit, credit, and accounts payable, Supply Depot. Debit, credit. Okay, this time we paid cash, so we are actually decreasing our cash. So cash is an asset. We're going to decrease it on the debit side because we spent money, so our cash goes down. So instead of putting minus 300 like I did down here, if you can see that, I'm just going to record 300 on the debit side. Our accounts payable account, that's a liability. That's where we keep track of how much we owe Supply Depot. Well, we paid them, so we do not owe them as much. So that account is going to go down, just like we did in chapter 1. And it's a liability, so it's going to decrease on the credit side. So I'm going to put 300 on the credit side. My debit equaled my credit. Okay, so that is it for section 2. Be sure that you have your definition in your notes. So this one, the definition was chart of accounts. Make sure you understand your Your audit your understanding. There are 2 questions. What are the 4 questions used to analyze the transactions? And which 2 accounts are going to be affected when a business pays cash for supplies? So be sure to have those in your notes. Sometimes you're going to get pop quizzes on those. And we will do the work together and on your own and the problem tomorrow in class. See you then.